With all of the continued talk of uncertainty and tariffs and the economy and consumers and what's the Fed going to do, what's the Fed not going to do, one thing that's kind of been more so than not flying under the radar is the literal collapse of the housing market in the United States. And we all know that the interest rates not coming back down has led to the mortgage rates staying higher than most are comfortable with. We're hovering right around that 7% 30-year fixed. And that is if you have good credit and if you have money to put down on the property. Many are looking at much higher rates than that. And so home affordability is simply not there, right? It's out of the question for many people in this country to buy a home right now. Not only are home prices high and have remained high and continue to go higher, but the costs of owning the home, the mortgage, the taxes, the insurance, all that continues to skyrocket. So I saw an article today I want to share with you. It's out of the Las Vegas Review-Journal, but the data that is discussed in the article applies to markets across the United States. And in fact, they quote numbers, countrywide numbers relative to the sheer number of houses that are falling out of escrow, meaning buyers are canceling deals at record pace. And there's several reasons why a buyer would cancel a transaction once it's already under contract and in escrow. One of the reasons is during due diligence, they might come across something that they don't like about the property or that doesn't check out through inspections. Sometimes buyers will make a demand on sellers to reduce the purchase price or fix certain items. Sellers refuse, and therefore the deal gets canceled if it's within certain, contingency periods. Another reason, and the article discusses, is the sheer shock of the mortgage payment once the buyer's lender has worked through the numbers, has sharpened their pencil, and they get the actual term sheet, not the pre-qual letter and all that stuff to get the deal open, but the actual term sheet, what the bottom line is going to be. What is the principal, interest, taxes, insurance going to be what's the monthly payment going to be, right? What everybody wants to know is what is my monthly payment going to be? And there's sheer sticker shock. And so buyers have buyer's remorse. They look at their numbers and decide, we just can't afford this home. And so they cancel. So this is out of Las Vegas Review-Journal today, and it says, Las Vegas home sales being canceled at high rate. Home sales across the country, it says, are being canceled at elevated rates, and deals in Las Vegas are getting nixed more often than in most metro areas. If you guys live in Las Vegas or in the Nevada area, leave me your thoughts and comments. Let me know what you're seeing. And also, look, as always, if you're in real estate, if you're looking to buy a property right now, maybe you're in escrow, let me know, what you're seeing, what your thoughts are. Across the U.S., roughly 56,000 home purchase agreements were canceled in April, just in April alone, amounting to 14.3% of homes that went under contract last month, listing site Redfin reported last week. So look, that's approaching 1.5, out of 10 deals, right? Almost 2 out of 10 deals that are getting canceled. It says the cancellation rate was up from 13.5% a year earlier, the company said. Atlanta led the country in canceled sales last month. That's 20%, while Las Vegas ranked 8th at 18.6%. So again, the average rate of cancellations now is 14.3%. In some areas, like I'm saying here, Las Vegas, almost 20% are simply never making it to close of escrow. Overall, the company said buyers are skittish for several reasons, including economic and political uncertainty, increased inventory, which has given house hunters more choices, and sticker shock as mortgage rates and home prices remain stubbornly high. that seems counterintuitive to me, that with more inventory, you'd also be seeing a heightened rate of cancellations. Meaning, if it's true that buyers have more options, I believe inventory is up, then why, let's say, if they have more options, they take their time, presumably get under contract, get an escrow on the one they think is going to suit them, why would you also have a correspondingly a higher rate of cancellations? And the reason is this. Among them, some would-be home buyers are making offers on homes before they see them in person. Most of them are making offers, and then when they get their monthly payment printout, they cancel. Once they digest the actual figures, work it through their budget or what have you, they simply understand they can't afford it. Now, many, as we've talked about on this show before, somehow bridge the gap, get the escrow closed, and then find themselves in real trouble when they can no longer afford to make the mortgage payment, make the tax payment, make the payment for the homeowner's insurance. And what happens eventually is the house goes into default and there's a foreclosure. Says they knew what that payment was when they made the offer. They're just having buyer's remorse, according to this author. All told, home prices ticked higher in southern Nevada last month, but sales totals tumbled and inventory skyrocketed. What does that mean? All right, well, what's the indication there? People simply cannot afford to buy these houses. Buyers picked up 2,174 previously owned single-family homes in April. That's down 7.1% from the same month last year. And they paid a median price of $480,000. That's up 2.3%, according to Trade Association Las Vegas Realtors. So we have home prices up that much. The median price of the house keeps pushing up while inflation is higher, costs of everything is higher, food, insurance costs, all those things. So people are just too stretched. Okay, they're at a point now where they simply cannot afford to, we say, get a piece of the rock, so to speak. Sales of previously owned homes are down across the country. With the boom and bust track record, Las Vegas housing market has long been a volatile one. It says that Southern Nevada has a transient population, tourism-dependent economy with a history of extremes, ups and downs. But in areas like Las Vegas, Nevada, and also like Texas, other states, you're seeing it in Florida, you're seeing this huge run-up where a lot of people were moving out of, say, for example, leaving California, moving out to those states, and running up the housing market. Look what's going on in Austin, Texas, and has been now for several months. It's collapsing, right? Look, you have several areas now in the state of Florida also collapsing. Las Vegas, go back and do your research, see what happened in 2008, 2009, during the great financial crisis when the housing collapsed. What areas were hit the hardest? You had areas like Las Vegas got destroyed. You had certain areas in Arizona. Phoenix area got hit hard. So you're seeing these patterns now emerging again in the housing market. Probably no surprise to many of you that follow this channel. So what's the takeaway? The takeaway, is if you own a home and you're sitting on a nice piece of equity right now, don't do dumb stuff. Don't get yourself in a situation where you risk that equity. Protect your, what you have. Don't get into bad business transactions, business deals. Don't personally guarantee obligations for unrelated things and put your equity at risk. It's something that should be prized. And frankly, I believe, layperson perspective, the equity in these homes across the country is going to start coming down substantially. So hopefully you have a nice equity position if you have a mortgage on your property. If you are looking to get in and buy a home right now, looks to me like you're going to find, if you're in a position to do it, right? If you've worked on your credit, if you have money for a down payment, if you have a good paying job that's consistent, and you have been smart with your finances, I think those folks are going to start seeing some opportunities pretty quickly. And look, there's a lot of pressure, as we know, on the Fed to act. There's more stories in the news today I saw where Jerome Powell is coming out, and I think the Fed minutes, meeting minutes were released or something today, where there's a real quandary there, and he's seeing stagflation. Let's see how much longer the Fed's going to use the tariff, unknowns to stay on the fence or to remain on the fence, from lowering interest rates. My take is it may not be too much longer. We'll have to see. Okay. Thanks for tuning in today. As always, I appreciate you guys hitting the like button for me, subscribing to the channel. It's a free and easy way to support the community, and we are growing. So thank you again to all of you, and I'll talk to you soon. All right. Bye.